Welcome to free advice. And there's some people that'll tell you that it may be worth that, but we don't want to. You know what I mean. Whose crystal ball are you going to believe in this time? What should you do with your money? Yeah, what money? All right, all right. Buy in the stock market. You have to applaud if you agree. Buy gold stocks. You're going to, as of this taping, March 17th, 1980, gold's at about $485, and you're recommending that we buy it?
About $472.
Oh, excuse me. All right. And you're saying buy.
And I'm suggesting we ought to nibble away at it. This is a nice time to average down, especially if you bought some of that expensive gold. We'll see $1,500 to $2,000 an ounce gold sooner or later.
You're kidding.
We'll probably see $400 on the way there, but now is the time for the long-term hedge to accumulate.
Now, I have one of your Rough Times newsletters which says get out. Last October, didn't you say get out of gold?
Last October, I suggested that people ought to assess their temperament, and I told them it's going to be a wild swinging market. If you can't live with it, if you can't sleep with it, sell. If you can, I said, hang on, it's going to be at much higher prices later on.
Mr. Ruff, sir, the advice that you gave, and it doesn't make you a bad guy, and you're certainly free to change your mind, but your readers were advised that gold was inflated, the Arab money influence had inflated it, and they can just as easily pull the rug out, and you said, I wouldn't buy gold. That's what you said.
No, that's not what I said, Phil. And in fact, I wrote it, I know what I said.
Okay, tell us.
What I said was that gold was, the markets were now irrational. Not the metals, the markets.
Yeah.
And I said it was $430 an ounce at the time.
Yes.
And I said that gold is supposed to be a security blanket, and if your security blanket is having a nervous breakdown, it probably isn't okay for you. So I said, here are 3 alternatives. I carefully list them. If your temperament is such that it's making you nervous and you can't sleep, sell. I suggested a second alternative, just as valid. Said if you can sleep after you've sold some, then fine. Take your original profits out of it, because we had a lot of profits in it. Ride free with the rest. And I said, however, if you got the guts and you got the temperament, hang on. That's an appropriate strategy because it's going to be much higher later on. It was an assessment of people's temperament. And then I said specifically, this is no attempt to call a top in the market. The next issue, gold has sunk to $365, and I really looked great. And I went back in the newsletter and I said, if people patting me on the back saying you called a top, I said, if I called a top, I was lucky. It was not an attempt to call a top. It was an assessment of the individual. Then when it took off and hit 460, again, with 365 up to 460, I said, now I think we ought to nibble away at it, maybe a few Krugerrands, but not as an investment position, as a long-term hedge position. I've been consistently advocating that, and I still am. This is an accumulation period and a marvelous buying opportunity to continue to accumulate.
That's Howard Ruff, who wrote a book, a big-selling book titled How to Prosper During the Coming Bad Years. Do I have it correct?
You got it right.
Also, here's Morton Shulman. Dr. Shulman is a Canadian physician, a doctor who continues to practice, and who had a tremendous book not long ago, which was titled
Anyone Can Make a Million.
Anyone Can Make a Million. I read it, and I'm still trying. You're back now with a book titled How to Invest Your Money and Profit from Inflation. How do you feel about Mr. Ruff?
We stand pretty close on that, except that I don't try and pick tops or bottoms. I say buy it, hold it. If we look a year down the road, you're going to see $1,000. If you look 5 years down the road, you get $5,000 an ounce. There's just nothing better.
You really agree with him that it's going to go to $1,500, $2,000?
I don't think gold's going any higher than anything else. I think raisins are going up, and shoelaces, and suits.
But you also think gold is going up?
But you can't buy raisins and store them. You
Sure.
can buy gold and store it.
But the point is, gold, as we speak, gold is going down.
That's right.
You're saying buy.
Things fluctuate, but the long-term trend is this way.
Some people seem to have missed the point that the way to accumulate good assets is to buy when nobody else wants them. In fact, Baron Rothschild had the best rule I know. He said, buy when the blood is running in the streets. And what he was saying is you buy when everybody thinks there is no tomorrow for that particular investment. That's why I just put the word out, said throw caution to the winds, buy long-term bonds. The market has crashed. Nobody wants them. Everybody says they're going to heck. And I think there's some great capital gains opportunities.
What kind of bonds?
Long-term treasuries.
This is wrong. This is bad. If you buy long-term bonds today, you're going to take a bath in about 3 months. Your clients are in real trouble.
All right.
You just buried yourself.
All right.
You're wrong.
Dr. Shulman,
wrong.
let's throw up here. We want to show the folks your recommendations for good investments. And we'll have Mr. Ruff comment, and you tell us why. So here's visual 1. This is compliments of Morton Shulman. Good investments. Single-family homes. Just stop me. Farms,
Comment?
Yeah.
Single-family homes, but I'd wait a little while. I think prices are going lower. I think the real estate market is going to be flat on its back 6 months to a year and great opportunities. He's right. I would just wait a little bit for timing.
You mean if you wait a little bit, you're going to pay less money for your house?
No, you're going to pay much higher interest rates for your mortgage. Wrong again.
Interest rates and home prices will be down.
All right.
Bet on it. Interest rates and home prices will be down. I don't know, but a lot more.
All right. Farms? You give them farms?
Farms, right with them.
Gold and silver? You're with them there too?
I'm with them there.
Wealth in the ground stocks, meaning metals and oils. You agree with that?
Yeah, I would agree with him.
All right. Art and antiques.
Agree with that.
Old stamps, coins, books, and rugs.
Right on.
Boy, look at that. And commodities. Are you saying, do you share his enthusiasm for commodities?
Not now. I think we're going to be in a long bear market for commodities for about a year. Simply because we're moving into a period, the economy's coming to a screeching halt. We're going to see not deflation, but a lot less inflation temporarily. A temporary interlude in a long-term inflationary trend, but long enough that I think I'd be a bit cautious.
All right. Now the bad side. All right. These are Morton Shulman's no-nos. Stay away from Treasury bills and all other government bonds.
I would, right now, I don't think I'd want to be in Treasury bills except for the money that I have to keep liquid somewhere and can't invest because of business or personal reason. You know, some people have to keep some money liquid, so T-bills are an okay place for that. But as an investment, it's a lousy investment. It's just, but it's better than the bank.
Why is it better than the bank? I mean,
more interest.
Well, you get a good return.
But you're still
it's not better than it's not better than an S&L. Savings and loans.
Well, it has more liquidity. An S&L, if you want a high-yielding certificate in S&L, you're locked in for 6 months or a year or whatever. But with T-bills, you have liquidity. You can get in and out in a hurry and still get a pretty good yield. But it is a lousy beat and hit inflation investment. I agree with Morty. But some people have to have liquidity and can't invest in the traditional sense, so T-bills are a place to park it. But bonds, which are anybody who buys bonds, holds them to maturity, is nuts. You'll get clobbered by inflation.
You're recommending
but
that
bond
for
prices
clients.
are cheap. No, I'm not recommending it. I'm saying for a short-term capital gain opportunity over the next year, bonds are selling cheap. I will sell them at a substantial profit, and the capital gain plus a yield will beat the heck out of inflation this year only.
I hope you tape this and bring him back in a year so people can cry with him.
All right. Next.
If you promise to do that if he's wrong, too.
Corporation bonds. You don't think that's such a hot idea? You don't want people in the stock market.
Well, most stocks. Some stocks are good, but most stocks have no protection against inflation. And you're going to see a bath in the stock market over the next few months that's going to make us all very, very unhappy.
Very shrewd. I agree.
You agree, huh?
I'm with him.
Boy, the stockbrokers must be crazy about you.
We have something to offend everyone.
Why doesn't the stock market more accurately reflect inflation and the upswing in the...
The problem basically is that most companies have no ways of protecting themselves against inflation. If you're running your utility, your costs are going up constantly, but you can't increase your charges to meet those costs. So that's why the stocks reflect it when they go down. Most people, I bet you in this room, many of your listeners are putting their money into utilities, and it's a real disaster.
Utilities are?
I would disagree with that for the moment. He's right in the long run. He's absolutely dead right in the long run. But utility stocks are very interest rate sensitive. And if I'm right about interest rates and inflation rates coming down, then utility stocks would be a good short-term buy, a good buy over the next year. For the long-term investor who doesn't want to worry about moving in and out over a period of a year, then you take Morty's advice. But there's going to be some great profits to be made if my scenario is correct about falling inflation rates and falling interest rates over the next little while.
His basic scenario is wrong, so therefore what follows is also wrong.
And you're predicting what? Falling?
I just have there's an old adage says, time wounds all heals. And we'll see who's the heel.
Okay, but I want to make sure we're understanding your basic tenet.
Okay.
Mr. Ruff, you're saying that over the next 12 months, what's going to drop?
Over the next 12 months, we will see falling inflation rates and falling interest rates in a recession, a deep recession. It is only a temporary reversal of a long-term trend that will continue after the recession. 2 years from now, 3 years from now, we'll look back on today's inflation rates and interest rates with nostalgia, the good old days. But in the meantime, this recession, with the economy, what I believe coming to a screeching halt, when interest rates are coming down, bond prices are rising. You buy them and sell them like stocks.
Interest rates are going up. They're not going down. They just raised them 3 days ago.
Long-term rates hung in there, Marty. We had 2 prime rate increases, and the long-term bonds hung in there solid as a rock and did not fall.
It's true. Short-term rates are going up very rapidly. And
but when you're buying bonds, you're buying long-term rates.
As night follows day, the long-term rates will follow the short-term rates.
We'll see. We will see.
Okay. Just one specific question. I know that aviation fuel is very expensive. I know that some of the major air carriers have sustained losses over the past couple of quarters. But we've got major airlines selling for $9 and $10. Now, if that isn't a bargain, I don't know what is.
Oh, but their troubles are just beginning. As the inflation gets worse and people can't do the basic things, they're not going to travel. Holidays
I think they're going to get on an airplane before they're going to take the Toyota out, because it's going to be...
No, because
first of all, you don't know what gas stations are open. Second of all, our conditioning and demand for leisure is not going to go away.
No, I think they'll decide not to go.
Oh, I think they're going to get on airplanes, and when they land, they're going to get on a bus to go to where...
We'll see whether you're right, won't we?
They're not going to be able to afford the basic things, and they sure as heck aren't going to be able to afford the frills. And all the companies involved in frills, whether it be in tourism or in travel or anything that isn't essential, are going to go right down the drain. That's why Polaroid and Kodak are having so much trouble right now. People just can't afford to take as many pictures.
There's something more important. We talked about this when I was on your show with Paul Apprentice, and we talked about how corporate earnings are inflated due to present required accounting methods. Corporate earnings are nowhere near as good as the earnings reports and statements would indicate if you adjust them for inflation. In effect, there are corporations, just to sum up quickly, corporations are paying dividends and taxes out of non-existent earnings if you adjust them for the inventory profits they show and for the inadequate depreciation allowances, and the market is reflecting that in the price, and I think the prices are not underpriced, they are not bargains, they're reflecting reality better than the numbers would indicate.
Going lower, no question.
No question about it, General, I agree.
Well, you are really... It's a wonder you're not wearing black capes. Let's see this next one, Ron. Let's go back to this. What else we got here? Corporation, most stocks you say no. Mortgages. A mortgage is a bad investment?
It sure is, because your money is locked in for X number of years at, say, 15 or even 16%. But if we look 5 years down the road, inflation is going to be 30 or 40%. And that money you put in a mortgage is just going to disappear. When you get paid back, you're not going to be able to buy anything with the money. And I'm sure that Howard Ruff will agree with me.
I'll take it even further than that. Any fixed return investment that gives you, where you put your money and you get your money back in the future, in the distant future, and get interest, is a crummy investment. Your rate of return will be lower than the rate of inflation. The only exception to that, in my opinion, is the bond, because the bond also can be bought or sold and rises and falls in market value. A mortgage doesn't. A mortgage, a certificate of deposit, you're locked in, you get ripped off.
Well, but why couldn't we argue, get your mortgage now because it's going to be twice as much interest next year?
That's the other side of it.
Be
Get
a
your
mortgage
now, but don't put money into mortgages. By all means, I think the best investment in the world is buy a house with the longest term mortgage on it, in which you can afford to meet the payments, and you'll be happy.
Yes.
Someone's happy about that.
Well, all right, but isn't there something unpatriotic, even for a Canadian, to come in here and to suggest that during inflation is the time that you want to be a little overextended in your credit? It's exactly what the president is telling us not to be.
You have to protect yourself. Do you think that president or any other president is going to solve the inflation? The inflation is not going to go away. It's going to get worse. It's going to be with us 5 years now and 10 years now. And if you don't protect yourselves as individuals, you're foolish.
But you haven't answered my question. We've got a president. We've got a president who's saying, "Please don't use your credit cards. We're overextended. We can't pay back." And you're saying this is exactly the time that you should be extended. Use somebody else's money during inflation.
Anyone who understands the use of debt will do it in such a way that he's not overextended. I personally think that consumer debt, the kind where you buy a vacation or a TV set and pay it off, is a stupid thing to do in an inflationary period, because your remaining income can get squeezed and your purchasing power gets chewed up. But debt to produce an investment that you can rent out, which produces income to make the mortgage payments, is not overextending yourself. And buying homes for rent is a sound thing to do in a long-term inflationary
But most of us
spiral.
aren't capable of making that kind of investment.
Oh, sure, yeah.
Still, anything you buy next year is going to cost more. You're better to buy it this year. It's going to be cheaper.
All right, I just want to make sure I understand you now. If you're going to buy a house now, assuming you can come up with what you're saying essentially is you're better off to have a larger mortgage.
Yes, for two reasons. If people get in trouble, let's say there were a lot of foreclosures going on. If you had a house worth $50,000 and a $40,000 mortgage, the bank has to repossess it. They write off a $40,000 loan to pick up a $10,000 equity. They're not very interested in that. They'll work with you. But if you have a $50,000 home with a $10,000 mortgage, they'd love to repossess that home because they pick up an equity. They can. So you're safer. Also, you can diversify. If you have a certain amount of money to make down payments, the bigger mortgages you get, the more properties you can buy to diversify and hedge your
but $10,000 down on a $50,000 house is a 20% down payment. Most the banks aren't going to accept that low of a down payment, right?
I have bought buildings with no down payment.
Well, that's because you're a famous guy who's got a lot of money.
No. I did it because I didn't have a lot of money when I did that before I was famous.
All right.
The bottom
can be
line
done.
is put down the minimum you have to, because you'll never pay off the balance. That mortgage will be a present to you when the thing comes due. You'll pay it off with devalued dollars.
Absolutely.
Really. And yet the banks on the other team saying, we're going to get you for as big a down payment as we can, or we're not going to even talk to you.
They're the enemy.
They are.
All right. Let's just see. Let's finish this up, Brown. Life insurance? Don't buy life insurance?
Buy enough to protect yourself, but don't buy expensive insurance, because when you get that extra money back, if you're smart enough to outlive the policy, it won't buy anything. It's just money right down the drain.
So you step forward to say that whole life
is a mistake.
A bad one.
And buy term.
But by the same token, most people are underinsured in terms of the term insurance coverage because they don't realize the cost of everything's gone up and the amount of coverage they have is inadequate to deal with
inflation. So they should get more protection.
More term, zero cash value insurance.
You remember when I got married, man, 50 grand was a ton of money. That'll bury you today.
Barely.
And leads what? All right. Pension plans. Don't invest in them, huh?
Most of them are no good. A few are all right, but most of them are loaded up with bonds and fixed-term things that just don't grow and don't keep up with inflation, and they're a mistake. A few have wealth in the ground stocks. They're okay.
Okay. Listen, this is going to kill you. We've got to break. All right, just let me sell some wine here. This is something. This one's will knock you out here. All right, I have a valuable bottle of wine here that has appreciated in value, and I was smart, and this bottle of wine has increased in value. Give me the year. 44? 67? 1975. How much you pay for this, Dr. Shulman?
Well, I bought it for $8, but you'd have to pay about...
well, no, wait a minute. You bought it for $8.75?
In 76.
In 76?
Yes.
Did you buy the certificate or did you buy the actual wine?
I've sent a check in, and the wine arrived 3 years later.
Yeah. All right, so $8 a bottle you paid.
That's right.
How much are you going to sell this for today?
Well, I wouldn't sell it for $65, but I could get that today easily, but I wouldn't sell it because that's a great wine. It's going to increase in value faster than mortgages or bonds or anything else, or even gold.
Really?
And I would disagree because I'm a teetotaling Mormon.
Well, can't you buy it for investment purposes?
You don't ever drink those wines. They're never for drinking. In fact, I'm told the 75 wines won't be ready to drink until 2025, and I'm not going to be around anyway.
All right. Here's probably the most famous label in all of wine. I mean, I don't know what the biggies think, but Chateau Lafite Rothschild is about as good as you're going to get. I mean, that's pretty classy stuff. 1970. How much you paid for it? Well, in 70?
$9.
$9 for Lafite in 70?
That's right. That's all it was when it first came out.
All right. How much you going to sell that for now?
Well, that's worth about $80.
$80.
Better than inflation.
Where were you? Where were you when we were... All right. You know,
never drink it.
All right. Here's Chateau Mouton Rothschild, 1959. 1959. Gosh. I mean, I graduated from college in 57. All right? How much? How much you pay for it in 59?
$4.50.
$4.50. $4.50. What's it worth today?
$200.
$200. Why are we working?
There are bad years in wine, too, I must point out. In the bad years, you have to drink. You drink the 72s.
Did you buy any of those, Morty?
Unfortunately, I'm busy drinking them up now.
Hey, we're with two people who really have some strong feelings about the stock market, about what you should do with your money, inflation, where is it going, et cetera, et cetera. You know, it's interesting. Howard Ruff says, among other things, that you should buy land in small towns.
No, buy buildings, income-producing properties in small towns, not raw land. I prefer. There's nothing wrong with raw land. It's just that when I buy something, I want to be leveraged. I want to buy it with a loan. And I don't want to have to make the payments out of my own pocket. I like my tenant, in effect, to make the payments. But I like income-producing properties, small apartment buildings, homes for rent in smaller areas.
The reason, okay, we'll give you a chance to dissent here, Doctor. The reason you say that is that you feel that the impact of inflation lags in smaller communities. Is that right? In other words, a hotel room in New York, that's why a hotel room in New York is more than Des Moines. Is that
Well, that's part of it, but there are really two basic reasons, quickly. One, there's a demographic shift in the United States representing a shift of middle-class America with their money and their talent, their education, and their businesses from big cities to small towns. And so that makes it a better bet. Second, I don't like to buy a building unless it has a positive cash flow. It sells at a price that's realistically related to the rents I can get. And you can't do that in the big cities, and I can do that in small towns, so I very much prefer. I want positive cash flows, and I'd rather bet my money where the people are going rather than where they've been.
Well, what's your problem with that?
He's wrong, because rent control is going to come in. It's going to get tighter and tighter all across the country, and the positive cash flows are going to turn into negative cash flows as your costs go up, and the local governments won't let you increase your rentals appropriately.
Can I answer that? The reason why, one of the reasons I'm avoiding the big cities is that's where the rent controls will be. Small town America, under every previous rent control laws we've ever had, 4 units and less have been exempted. Well, and that's why I'm suggesting the smaller buildings, smaller units.
That have gone through inflation, like mine. There's no exemptions, and sooner or later the pressure from out there to do something on the politicians is so great, and there's so few things they can do, and one is rent control. And
your country is Canada. Do you both predict wage and price controls?
Oh, yes.
Yes, we both do.
When do you think it'll be? It's not going to be an election year.
Well, there are 2 possibilities. If right now, in my opinion, the inflation rate has peaked, but the indicators, the consumer price index that shows it running a couple of months behind may show a couple more months increase, which may panic the administration into them now.
All right, they're upset. We got to break. Why wouldn't you buy AT&T, IBM, and all those blue chips? Come on.
Awful investment.
Really?
Because they've been crummy investments since 1966.
Crummy?
Since 1966.
Crummy? $150 IBM was like 7, 8 years ago. Now it's split, and now it's
and it's still less in terms of real dollars.
If you adjust for inflation, it's gone downhill. You've lost
You're saying the most
power.
conservative blue chips have not really done it for their holders. Is that what you're saying?
The world is turned upside down. All the things that people consider safe, blue chip stocks, certificates of deposit, cash value insurance, inflation has destroyed the validity, and long-term bonds held long-term, it's destroyed the validity of those things. A quick on his feet speculator can make some bucks, but the long-term buy and hold forever investor is getting ripped off by doing the things that no longer work.
Well, what you're attacking here is this fundamental conservative philosophy about which so many brokers brag.
But it doesn't work in inflationary times. It's good. It was good in the 30s and the 40s and the 50s, and now you have to look to equity, whether the equity is wine or jewelry or gold or land. That's where the money is now.
In things.
Things,
stuff you can see and feel.
Things. And you know, this bothers me as much as it does you and the frustration you're expressing. I grew up in a conservative Mormon environment that said avoid debt, don't speculate, put your money in the bank, don't this sort of thing. And it's offensive to me to have to say that. It really is. It enrages me. But that's what I have to teach my kids.
But there's another question here, and that is with the diminished respect for this traditional Mormon salt-of-the-earth approach to life, what we are doing is turning our back on what we've all bragged about as the American way.
But that's not our fault.
Society break down. And I think the only answer is individuals have to protect themselves because the society is going down the drain.
Howard Ruff, Morton Shulman, what do you think? We hope you'll join us. We know you're broke. Everybody's broke. But you do have a little money, and what should you do if you do, and etc. All right?
You know, you always say you're a slave. You should invest in things. But if you're trying to beat inflation, then you're always at the mercy of the rates of currency that you're going to convert those things into at a future date.
Well, you're never going to really convert those things into currency until you need the money to spend for the essentials of life. If you're buying a house, you're going to live in the house and enjoy it. You're not really thinking of making the extra dollars because you're not really going to jump ahead. You're just staying even, but you're going to live better.
More than that, the amount of currency into which you will convert it will be a heck of a lot more than the currency which you spend on it.
But inflated currency.
No, but you got more of it to compensate. That's the whole point. That's the whole name of the beat inflation game. We know that the currency is falling in value, so you need more of it in order to keep the same purchasing power. So when you buy the kind of things we're talking about, you can convert it into more currency at a later time, and so your purchasing power in total has remained the same.
So things go up, money's going down.
There's one way to get ahead of inflation, one way only, and that's to buy things with someone else's money. And when you have a mortgage on your house, that's what you've done.
You know, I had a call from a little old lady once on our hotline at our newsletter. And she said, well, why can't I invest in an insurance company? Why can't I buy this cash value insurance, this annuity? No insurance company failed during the Depression of the 30s, which wasn't completely true, but close enough. And I said, look, I'm not worried about the insurance company going broke. The money is going broke. The money they will give you back when you die, or the money they will give you back when you decide to cash in your policy, is what's going broke right now at the rate of about 18% a year, which is the definition of inflation, the money going broke.
I'd like to ask if the wage and price controls may be going on, and I keep hearing they won't work.
No.
What seems to be after that?
Well, then you have a real collapse. And wage and price controls are exactly like taking a kettle that's boiling, so you don't want that steam coming out, and you put a cork in. And for a short while, everything seems fine, and nothing happens. The steam stops, and then it explodes. Inevitably, with wage and price controls, after it comes off, after the rationing and the shortages and all the horrors that come out of it come off, prices are higher than they would have been without the wage and price controls.
So what would you do? What would you do then?
If I were a politician?
If you were a czar, yeah.
If I were the czar, I'd bring in wage and price controls because it would make all the people out there think I'm doing something great, and I'm hoping with a little luck I'll be retired and out of it before the damn thing blows.
Well, are you saying then that we were on a roller coaster over which we have no control?
Exactly.
You believe that?
Yeah, politically it's true. Theoretically, there are things that can be done, but politically nothing that's possible. But let me make this point. Wage and price controls are like doctors putting governors on thermometers so they can't go above 98.6 while quietly spreading virus throughout the community, and that's basically what government's doing.
That's true.
All right, but what you are in effect saying is the sky is falling, and there ain't no charismatic figure nowhere can do anything about this.
But,
that's what you're saying.
But I'm saying
both
but,
of you.
But.
Loyal American here, proud Mormon, traditional person, seeped in the roots of American conservatism and hard work.
That's wonderful.
And you are, both of you, I mean this now,
but
you are a hair's breadth away from saying this whole damn system doesn't work, and that's exactly the kind of rhetoric we hear from revolutionaries just before the whole damn
But the whole thing isn't going to go. We
can
can have a lot worse inflation. There's countries like Brazil and Israel have 100% inflation. They're managing reasonably well. This country has many good years ahead of it. Enjoy the inflation. Protect yourselves as individuals, and you'll do much better than the ordinary guy in the street.
How can you enjoy the inflation when people are not making it to the next paycheck, where both partners in a marriage have to work?
The ones that are listening to us are. But let me make this point. Inflation is just another episode in a series of crises that seem to roll around about every 50 years in this country. You either get a deflationary depression or you get an inflation. This is not the first time our currency is self-destructive. It's happened before. I happen to believe that the resilience and strength of this country is sufficient that we will recover. If I didn't think so, the name of my book wouldn't have started out with the 3 words, How to Prosper. It would have said, the end is near, give up. I'm just saying we've got to live through the next few years. We're just going to take 4 or 5 years to run this inflationary spiral.
You know. All right, I've got your newsletter, about which we had some difference a moment ago. The Ruff Times, Howard Ruff, October 1st, 1979. In the last 10 days, the wild and crazy gold and silver markets have forced me into the most agonizing decision I've made in the 4-year life of Ruff Times. Gold and silver have abruptly become useless, if not dangerous, as inflation hedges, and for many of you, even as survival hedges. I have sold most of my gold and silver coins, including most of my survival coins. Our Red Alert survivors were so notified either by phone or mailogram. All right, now, if that isn't a condemnation of gold, I don't know what in the world is,
Hey,
Howard.
I told you. I said the markets have gone nuts, and that's precisely what I was saying. But I said it is useless, even for survival coins, for some of you. You read it there. Read it again.
Okay, but this sounds a little bit like Gene Dixon, you know.
No.
Well, I didn't say you're going to move to
Now you
Africa.
go through the rest of the article, and it lists the 3 alternatives exactly as I described them to you.
Even when I felt...
And I think they're numbered, 1, 2, and 3.
Yeah, 1. Gold is counter-cyclical to paper money.
No, that's not the part.
All right. Okay,
I'm gonna find it for you.
find it in there.
Well, I didn't make
all right,
that
we've got to break here. I don't mean to. But please, all right, you can go back to that.
I got it. There's several appropriate strategies to use. 1, keep them. But only if you're absolutely positive you can live with the emotional trauma of being paper rich one day and half as rich the next.
All right, keep them is not the same as invest in
If you
them.
feel you can handle it, stay on.
Oh, but Howard,
2, sell enough to get back your original investment, hang on to the rest.
But Howard, you lost your enthusiasm for gold. That's all right. This is not an investigation.
And then I got back in, and $30 higher, I got it back.
All right, okay. All right, that's legal.
Sure.
Tell me why, one more time. I'm sorry. Okay, we'll break, I promise. Why shouldn't I be worried about a a revolution?
Oh,
Why shouldn't I be...
This country is basically very stable. The democratic countries of the West are not going to collapse because of inflation. Many, many countries have gone through inflation. We will have an economic reform. You will at some point get a new dollar for every 10,000 old dollars. That's a long ways away.
We'll be back in just a moment. All right, I really haven't, I'm not kneeling in homage to these, although I got to tell you, I admire the courage of, what do I want to say? They really do say how they feel, and nobody's going to accuse them of vacillating. Okay, here, we just want some goodies here. This is what is called a Krugerrand, huh? 1 ounce of gold. That's solid?
Solid gold.
1 ounce of gold. Did you buy this by any chance?
Yes, I bought that exactly a year ago, and I paid $235 for it. And if you were going to sell today, you get exactly double.
And if you sold it a month ago, you'd have gotten about...
Triple.
Triple. Yeah. Gold got up to what, 9 something?
850.
880 topped one to intraday.
Yeah. And just for the record, you're saying this still ain't no bad deal, huh?
It's the ultimate wealth, and you know, it's one way. It's so much better than paper money. That's always going to be worth an ounce of gold.
Phil?
Yeah.
But history's littered with paper currencies, and 1,000 years from now, nobody will be able to buy anything with a Federal Reserve note, but I bet you there'll be Krugerrands of people. But you can buy some with a Spanish doubloon today, for crying out loud. Those things persist.
Yeah.
The Australians, incidentally, because of the wild fluctuations of gold, have come up with a new gold coin called the Krugerroo.
All right. This is a 1977 South African gold piece. Isn't that something? All right. Now, what's going on here?
These are just 2 examples. I found these in downtown Chicago at Marshall Fields. These are 2 examples of beautiful things that retain their wealth. When I was here last time, I was suggesting buying 18th century things. They're just too expensive now. These are 19th century. One is a brooch, the other is a watch. They're both beautiful. They will always have the value of an innate thing.
Okay, except that you've got to have some smarts to know what you're buying. You know, I could buy the bottom of a 7-Up bottle. I don't know what to do.
Yeah, that takes skill. Any collector items require skill, and you got to make it a hobby to make it work. But if you do that, a lot of money can be made in collecting anything they ain't making no more of.
All right. What? How much you pay for this brooch?
The brooch is $1,250. The watch is $1,500, and that's what they're worth today.
You mean what do you mean? Well, what'd you pay for it?
I haven't bought them yet. They're on approval from Marshall Field.
Oh, I see.
Actually, my wife likes them.
Oh, I see. So, but you're going to?
I'm going to.
You're going to pay $1,500 for this thing?
And I'll tell you something. When I come back a year from now, I can sell that for $2,500 to $3,000.
Make it 2 years. It'll be cheaper a year from now.
Look at the stamps here, friends. Tell us about this.
Those are American airmail stamps. You could have bought those 10 years ago for, perhaps $25. Today, they're worth $600.
American-made stamps.
Send a letter a long way.
All right. What's that?
That's an old.
Numismatists would know.
That's an old Roman coin. It represents.
Sorry, I'm sorry. I did that to the camera. I'm sorry.
You could have bought a bus fare in ancient Rome with that, and let's say 5 years ago that would have been worth about $12. Today it's worth $1,200.
$1,200.
That's inflation. The beauties of inflation.
Man, I'd love to. Huh? We have a slide? All right, let's see the slide. I just want to show you this. That's a snuff box.
That snuff box I had here on your show 3 years ago, and the reason I brought the picture is I don't own it anymore. And 3 years.
Wait. Now you give away the good part first. What did you pay for it?
$4,500.
You paid for it. How long ago?
That was 12 years ago.
And what did you sell it for?
I sold it for $150,000.
$150,000?
I sold it to a Swiss dealer, a man named Patrizzi.
Another fool? You think he's a fool? You think the buyer's a fool? But the point, see, while we're calling names, what do you mean he's a fool? Stand up for a second.
I'm just saying that all these people have so much money to go out and buy all these things with, right?
Well, but how do you think men like them got to be men like?
People that can buy the stuff that have increased with all this value and everything is these people who have years and years ago have all this
money.
They
started out with smarts and no money. That's the point.
Where do you buy something without any money?
You start
right.
You start by setting pins when you're a little kid back in the 40s, and you say, no. The point is that you seem to be angry because somebody used his head. Obviously, the guy that paid $150,000.
He used his head.
But the guy. All right, now how are you going to feel when the guy who paid $150,000 sells it for $250,000?
Terrible.
All right, but do you feel?
Can't buy that stuff.
But you can buy a Krugerrand. I bet in this room there's people that can scrape together $500 and buy a Krugerrand.
Right now I can't. How would we know who to sell them to, what to do with them?
There's no problem, because you can buy and resell Krugerrand with no problem anywhere in the world at the same price every day. March into any bank you like.
And we'll be back in just a moment. Morton Shulman can be reached by a United States mail at Random House, 201 East 50th Street, New York. New York, the zip is 10022. I should invest in some glasses. Incidentally, you were saying, we don't have any money. I mean, who do we think you are? $8 for a bottle of wine. Where were you in 1975? Huh? Oh, you bought it and drank it. Okay.
You haven't mentioned anything about copper. I was told that copper would be a good investment today. What do you think about it?
Bad investment today. You're going to have a recession here in this next year, and the price of copper and other things that go into construction are going to go down. Do you agree?
Well, one point. I think copper at the end of the year, 18 months now, will probably be worth twice what it is now. But the problem is, about the only way, practical way the average person to buy copper is to accumulate pennies. And the problem is $1,000 worth of wealth stored in the form of copper would weigh about 700 pounds and fill a bathtub. So there's some practical limits on what you can do with copper.
Why don't you buy certificates in copper mines?
Or copper futures.
Yeah, you buy copper futures, but that's a highly leveraged market that's not for the investor. That's
I thought you just told us that the gold that the metals in the ground were good investments.
Basically, yes, except for copper, because copper depends. Gold, silver, platinum, palladium, great. Copper,
very
very
dangerous. So right on some things and so wrong on others.
I've been right, you've been wrong.
No way. No way.
Can you recommend anything in the antique field besides high-priced jewelry?
Oh, sure, there's all sorts of great things to go into. Snuff boxes are going up, Russian enamels are going up, Tibetan art is going up, Chinese art is going up. I think the next big boom is going to be in Russian art.
I think Chinese needlepoint looks really good, too. I was over there just recently, spent 17 days in China, and I picked up some of the most gorgeous needlepoint that 10 feet away looks like beautiful photographs. One that I had, for example, there were 800 different colors of yarn in it. It took 4 artists 3 months to do, and it was at an exhibition in Shanghai. I paid $350 for it. It'll probably be worth thousands in the not-too-distant future.
Yeah.
I'd like to ask you 2 questions. You said something about buying Krugerrands, and then you also said something about buying gold stack.
Mm-hmm.
Is that, I mean,
well, there are various ways.
as good as buying...
There's different ways to invest in gold. You can buy the actual gold itself. You can buy a bullion, or you can buy Krugerrand in the form of a coin, or you can buy gold stock, or if you're a real gambler, you can go in the commodity futures market and buy gold that way.
I personally don't believe, however, that gold is a good vehicle for the short-term trader anymore. The margin requirements of the commodities market are too high now. During these wild run-ups when it was $880 an ounce, try to sell some. You couldn't even get to a coin dealer with the Krugerrands. People stand in lines outside them. It was difficult. I think the only position for anyone in the gold and silver markets is as the long-term, hold forever kind of a trader, or kind of an investor, rather.
The other question I wanted to ask is about, like, I like to advise my son with the smaller money that he has. Now, what about these money market funds where they can invest $1,000? Is that no good?
Bad, bad, bad. The interest you get doesn't keep up with the inflation rate, and the dollars you get back will buy less than you could have bought with them in the first place. I'd advise against that.
Well, and President Carter's new program is requiring those money market funds to put 15% of their money in non-interest earning reserves now, which lowers the yield even more. However, the only exception I'd say to that is for businessmen, people that have to have their funds liquid, that can't put it in gold and silver because they know they have to be in and out of that money, the money market fund is probably the best place for them. It's the best of a list of poor alternatives for them.
You lose your money slower.
I believe that gold is the best wedge against depression. But how good is gold? Gold is the standard of the world, but who controls that? What happens if that goes kaput? Then where are we?
Well, we have a history of some thousands of years. People traded gold in ancient Egypt and ancient Rome. They're still trading gold. Throughout the history of man, gold has always been good to change for food, and that's what it's all about.
And we'll be back in just a moment.
San Ramon.
San Ramon, California is the address of Rough Times. That's the newsletter. 2411 Old Crow Canyon Road, San Ramon, California, 94583.
No one has made mention about the girl's best friend, diamonds. How are they on the market?
Hold it. No, I want to get first blow in on this one. Marty says they're a bad investment. Let me tell you about diamonds. They are less liquid than gold or silver. That's their disadvantage. They are more liquid than real estate. Or diamonds, high-quality diamonds, 1 carat or more, have not had a downturn since 1933. They will increase in value, in my opinion, at 2 to 3 times the rate of inflation. You won't make a big killing like you did with this snuff box, and it's a relatively conservative beat inflation hedge. You put only money into them that you expect to never have to exchange except at some propitious time when you think the inflation rate has peaked.
This is wrong, but you buy a diamond that's marked up by 50% or more.
Don't buy retail. That's my other rule.
Well, how can you buy wholesale?
Because I got recommended firms. I listen to the back of my book that'll sell it to you wholesale.
And they've paid 30% to De Beers for their markup. When you buy gold, it's marked up by 1/10 of 1%.
Marty, since I started recommending diamonds a little over 2 years ago, the price at which those people who bought them could sell them for now is approximately 2.5 times what they paid for them. We've been right on that for 2.5 years, and I was the first one to call it.
But buyer beware of the
has been right.
But buyer beware of the markup. Is that your point?
Yes, you buy them. You have to buy them at the same price the jeweler pays for them, which is possible to do.
You both keep talking about look out for number one and protect yourself. Granted, inflation is terrible and all that, but isn't that self-centered mentality one of the causes of inflation in the first place?
No, the cause of inflation is all the money they're printing in Washington.
Absolutely, and more than that, I am actively, deeply engaged right now, and have just launched a whole new direction of helping, pulling people together to try to make some changes that I think will stabilize the country. I believe that the United States of America has given us the greatest benefits, prosperity. It deserves everything we can give to it. We have to protect ourselves, yes. Then I think we have a responsibility to take a certain percentage of what we have and put it into political action and those things that will help stabilize the country. We owe it. We should tithe to our country, in effect.
Tell that to the oil company.
You mentioned single-family homes as a wise investment. What about condominiums and townhomes?
Condominiums can be just as good, provided you buy them the same way.
Yes, agreed.
Yes.
Okay, you also mentioned that you can invest in real estate without cash down.
Yes, you
Small
can.
real estate. Could you explain that a little bit?
Yeah, very quickly. It's too much. I can't really go into great length. There are two things you do. One, you recognize that sometimes the seller will provide you your financing, in effect, by taking back a mortgage or a loan. And during the tough real estate market of the next year, where it's difficult to get mortgage loans and a seller is highly motivated, there are some of the best opportunities through creative finance to do that. Second, there's a super book in the market that I didn't write, by Albert J. Lowry, How You Can Become Financially Independent by Investing in Real Estate, the best book on real estate investment for the amateur investor with limited means that I've ever seen. So buy it and read it, and it'll tell you how.
Do you think the stock market will crash again, and if so, when do you think that might happen?
It's already crashed. If you compare it in terms of real dollars, what it was 5 years ago, you'll see it's gone way down.
In 1966 dollars, the Dow Jones is under 400 right now, and to break even with 1966 has got to go to 2,000. It's an invisible crash, disguised by inflation.
Mr. Ruff, what are the changes that you would make?
Well, several things. I'd index the tax rate so nobody could get inflated into a higher tax bracket. I would require the United States government, when it advertises its 7% savings bonds, to have in Hunter's orange across the bottom of the television screen a note that says this investment will give you a return less than the rate of inflation, resulting in a loss of purchasing power.
Well, why have those bonds at all? I mean, rather than make
government needs the money.
Huh?
Government needs the money.
Well, but who's buying them?
Lots of suckers.
Well, but the government should not be in the business of taking advantage of suckers.
But they are, and I want honesty in government. I want a truth in borrowing law. When the government borrows me, I want them to have to tell the truth.
Why can't they give it the same kind of rates of interest that the First National of Chicago gives?
That's not high enough either.
Because they got enough suckers who pay them the lower rates.
Yes. Yes.
You're saying long-term mortgages are terrific.
No, not to own them, to borrow on a mortgage for income-producing property purposes.
Okay, we have a mortgage on our house. If we borrowed against that mortgage, is that a good idea or not? Like putting a second mortgage.
It depends what interest rate. If you can borrow the money at less than the inflation rate, that's what my book is all about. If you can do that, you'll go far ahead.
Absolutely.
Yes, ma'am.
Can you come to our level for a minute and give us the best investment for a small, give us a couple hundred. We're not experienced in this, and what's the best investment for a small amount of money?
Well, I'm working on an investment program for people that don't have any money, and I haven't succeeded yet. Nor has anyone else.
Yeah.
However, you can buy a small gold coin. You can buy half-ounce gold coins for a couple of $100.
That's a start.
Sure, it's a start.
Buy a half a share of gold.
No.
Sure. Buy
a half an ounce of gold.
One of the small Mexican pesos, the 2.5, 5 pesos, little tiny coins that cost a lot less. You don't have to start with a frugal.
But see, if you had said that 3 months ago.
I did. You should have bought my book 3 months ago.
Well, but then 3 months ago, I would have paid $800 for the house.
And you end up making money because you'll get $1,000 before this year is out.
You sure? Gold's going to 1,000.
I've been preaching it for 35
I'm going to call both of you. Are you going to 1,000 too?
18 months to 2 years, you'll see it over 1,000, well over 1,000. But you'll see it below 400 before you do.
We'll be back in a moment.
If you would like a written transcript of today's program, send $2.50 in check or money order to Donahue Transcripts, Box 2111, Cincinnati, Ohio 45201. Include the subject or the name of the guest with your request.
This is Morton Shulman's book. It's titled How to Invest Your Money and Profit from Inflation, now in hardback. And for a guy who sold a snuff box for $150,000, I'm going to listen. Also, I'm going to listen to Howard Ruff, whose newsletter is titled Rough Times, and whose book, now in paperback, is titled How to Prosper During the Coming Bad Years, which is a #1 bestseller, not only hardback but paperback. Thank you both. I'm sorry we're out of time. We could argue with you forever. No kidding. I very much appreciate the contribution you made here to our understanding of a very complicated issue. Have a nice day, and goodbye, everybody.
Services provided and promotional fees paid by the following. Introducing the new Thunderbird with exciting options for the 80s, including the first keyless entry system and a dazzling electronic dash. Thunderbird.